Hey, good day, everybody. Jeffrey Beamer here, Senior Investment Strategist over at ewotrader.com. It is Monday, June 10th. June 10th. Had to double check there. We are off and running with the markets today. What a big week we have in store. There is lots of news. In fact, so much news we can't get to it all, but we're going to start the day talking about the trade that we gave out last week on RH, which is the old Restoration Hardware. And then we'll be going through, the charts and news, and I got another trade for you towards the end of the morning. So just hang on, we'll get there. But let's start with Restoration Hardware. This is an updated image from about an hour ago, okay, of our trade, and we are pretty much flat. Now, what's interesting about this is that, options, and especially near the money options, suffer from a high degree of theta decay, meaning time decay. Okay. And you lose money over time. As you see here, we're pretty much break even, maybe down $30, just very little movement. And this is because we've countered that theta decay with a surge in implied volatility. Now, I don't have that image up here, but IB has rushed into the options, holding the value of these options as we get into earnings. Now, Restoration Hardware, which is now RH, does have their earnings event Thursday after market close. So we will be updating this again next week. Now, here's the thing. In this type of position, if I get a double-digit return before the earnings event, say it could be 10%, but usually it's between 12 and 15% or more, I usually take the trade off. Okay, so that's just a kind of a guideline. It's a kind of a feel thing, not a hard, fast rule, but usually if I'm getting that 12 to 15% return before the earnings event, I will take that trade off and lock in that win. So let's go ahead and get into the top headlines here as we get through this Monday here. So real quick, RH is a hold. We're holding that for now, okay? As everybody should know by now, NVIDIA has their 10-for-1 stock split. Last trade right before I came on air was 122.40. And so now NVIDIA, what does this mean? Everybody is speculating. The fundamentalists are talking about the price to earnings ratio and the valuation and all this stuff. I can tell you from experience, this is a great opportunity for smaller investors to get a stock that is really at the cutting edge of a secular bull market. And trading at 122.40 is, believe it or not, much more affordable now than where it was last week at this time, which was over $1,200. So that is it. And then interestingly enough, software issues in automobiles, they just don't seem to mix. Stellantis owned Chrysler, recalling more than 200,000 SUVs and pickup trucks. And I keep forgetting that Chrysler makes pickup trucks due to software malfunctions. The stock is down 26% off the March highs. And this just does not bode well. I mean, just from a revenue thing, these expenses taken away from revenue. So we'll keep an eye on that stock, but it is well off its highs. And then jumping over to the oil markets, we were really bearish on oil last week, and rightly so, as demand was suffering, but that has reversed. Oil is. We'll take a look at it here in a moment, but it's a big rally today. It rallied all last week, really after our show Monday. The next day on Tuesday, USO turned around, crude oil, WTI turned around, and we have been rallying off to the races ever since. So we'll keep an eye on those markets. Interesting note from JP Morgan, they warn of a shot, a shock. And that should be shock to the stock market, not shot. A shock to the stock market before from the CPI and the Fed announcements. So they are seeing some movement. And believe it or not, what's interesting about that is the pricing that they're talking about in the options, and that's where they're getting this information from, is from the options market. Right now, that's pricing in about a 1.5% to 2% move. Personally, I don't call that a shock to the system at all, but it's a headline grabber. So I thought I'd throw it in there and just kind of explain how they get that data, where they get it from, and specifically, that's where they get it from. That's right from their trade desk, and they're looking at the options market. And lastly, I mean, there's several headlines that I wanted to talk about, but we could just get buried in headlines. So we'll finish up here with earnings announcements. This is the same as I wrote last week. We've really tapered off, but there's some recognizable names still ahead, and that will just continue on really through the month of June. So let's get into the markets, and we'll start with the SPY. We opened up lower this morning, and not big down, but we have rallied really since we got started, and we're bumping right up against that 535 level. It's what everything is in play here for the bulls. Okay, I'll put some moving average on here, moving averages. So my red line here is my 21 period moving average. Look how the spider responds to that. Just hold right here, went up, pushed against that 535 and held. Long-term moving average is way down here below around 489, not even in play right now. But what I don't like is when I use Heiken-Ashi candles a lot. And when the bodies start getting small, that's when I get a little concerned about a type of momentum changer. Doesn't mean the bull market is over, but if you look back here, we got so through here you can see that we have these smaller bodies, and then big, and then smaller bodies, and look what happened. We pull back a little bit, and again, nothing major, okay, but when we start getting those smaller bodies, and then we start getting wicks on the tops and bottoms of the candle, then we that is an indicator of a possible reversal. So let's get in a little bit more data here, and we'll move on then to the Qs, which are kind of in the same boat. So if we move on to the Qs, we're bumping right up against 465. Just we did that midweek last week, and we're stuck. Okay, 460 was the previous resistance area. Now, as you can see, we've got a bunch of days here at 465. We're just waiting on data. We're waiting on the Fed and other economic data. So, yeah, it's really nothing happening right now. IWM really has been the doing its own thing, and it is interest rate sensitive, and it hit our $200 target. I had a target of $200 really since about 3 weeks ago. Finally, it came down and hit my $200 price target this morning. Did not stay there, bounced right off of it, actually traded a little bit lower, as you can see here. And one thing I'll say about your targets like this is that it's similar support areas, and for that matter, resistance, but it's easier to image with support. It's like jumping in a lake with a life jacket on. Okay, you jump into the lake and you pierce through the surface of the water, and then you bounce back up. That's essentially what's happened here. Is that 200 level is acting like the life preserver. We dropped below it, traded down to 199, but then just came right back up. So we'll keep an eye on the Russell as we move forward. All right, jumping over to USO and the crude market. Last Monday, you see this big red candle last week. This is what we were looking at. In the morning, it was trading a little lower, but then through the day, it really dropped. Beginning Tuesday, we had a lower open. Actually closed lower, but this was the reversal day, and crude oil has just taken off. Today, it's up big, trading up almost 3%. But look where it's trading. In fact, let me adjust my data here so you can see pricing. We are trading right at $75. Okay, that is significant resistance. Now, if I put my moving averages back on, they seem to disappear on me. You'll notice, look at this, the 21 period moving average is coming down just under that $75 mark. Would not be surprised if we traded a little lower in the afternoon and closed right on it, but I would see 75 as significant resistance. And then if we push through this, obviously 77.5 would be the next, because that's this pivot point up here. And so we'll just incrementally go up from there to see if this rally has any legs to it. But it's really interesting to see this rally because of what I'm about to talk about next. Okay, there's a combination of things because the oil traders are looking at data, they're looking at demand, and they're looking at the Fed. Okay, who else is looking at the Fed? Interest rates. So let's jump over to the long end of the curve. Let's look at TLT. Well, we have interest rates rising again. Okay, TLT well off the highs of last week, trading lower. This is sending interest rates actually aggressively higher. So the long end of the curve here, again, TLT is the 20-year plus Treasury. It is trading now, dropped below my 21 period and my long-term moving average. They are looking at possible rate cuts. Now, that's where, well, we'll talk about gold and silver here in a minute. I jumped ahead because I wanted to talk about bonds real quick. Because the oil traders are looking at it, and so are the bond traders and the gold traders. So let's finish with the bonds here. I'll look at SHY, and then again the short end of the curve today. They're kind of quiet. Big down day on Friday, meaning rates shot up, and this will cause concern in the inverted yield curve, which we'll take a look at in a moment. Let's take a brief look at gold and silver. Gold again dropped on Friday. Rate cuts were the discussion. I don't see rate cuts until December. That is my analysis. I had rate cuts at the beginning of the year and forecasted for June. In March, I adjusted that to December, and everyone's talking about rate cuts maybe even earlier. Well, with the consumer spending that came out this morning, rising 3.3% on a year-over-year average, there are things stacking up against that. We'll see. But gold and then silver dropped as well. They both are in a pullback right now after this very strong rally that they both seen. They're just having a little pullback, and I could probably just do a little bit of technical analysis here, and we'll just take. Now, I usually, when it comes to support and resistance lines and trend lines, I like to use closes. Okay, so close to close to close. We're currently above the trend line here, and the 2 points. So from the close back here on this pivot right here up through this one, and this should be, notice here the horizontal line, which is previous resistance. Okay, that's this previous close, high close right here. It could drop right down here to this little wedge and then start rallying again. So we'll keep that in place, and we'll take a look at that next week. All right, so let's get back to bonds and what's happening with the yield curve. That is pretty interesting because we have dropped sharply on that inverted yield curve. We look at the 10-year versus the 3-month, which is what the Fed looks at, and we are trading down at 109. That's 109 basis points. So that is much worse than where we were last week. Bonds have been very volatile. They're fun to look at right now, but historically, we just don't look at bonds and interest rates very much. But right now, we do. We're really zeroed in and focused on them. So you can see this inversion is increasing, and that is cause of concern. I brought in some very brief historical data of the past week, and we can see day by day. Last week we were above that 100 basis point level. I think it was at 85. If we that should be coming up here in just a second, and then and now we're down at 109 basis points. So yeah, so 95 basis points. So last Monday we came on, and again this is delayed by a day. So we're looking at we were looking at that 109 was Friday's data. Okay, Friday's close. So May 31st, which was what we showed last Monday, it was at 95 basis points. And you can see that during the week, just the spread widening, 111, 119, 123. It did. So we have narrowed just slightly today, but I don't know if that's going to continue or not. That wider inverted yield curve, and just with it being inverted for so long, forecasting a recession, and again, it goes from two. It could happen 3, 6 to 18, up to 18 months, and we're getting close to, if not over that 18-month period right now. So just keep an eye out. Okay, moving on. Let's get to mortgage rates, because they're bouncing around as well. Mortgage rates dropped from 7.25% to 7% within a week last week, and now we've ticked back higher. Now, the blue line here is your daily rate. Okay, that's the Mortgage News Daily national average, and currently, it's trading up here at about 7 and change on that rate. Now, the long term, the weekly numbers, which are the Mortgage Bankers Association, that's the gray line, and Freddie Mac, which is the gold line. Those are weekly, and so those are smoothed out a little bit, and they're hovering right around 7. Okay, I know some people are getting rates 6, 9, and lower still, and that's great. And home builders, if you're going to buy new, they will look to lower rates as well with incentives. So still okay there as far as interest rates. Yes, they're higher, but these are not high in historical terms at all. All right, so moving forward, let's get into some trading here, and let's start with what we look at each week, and that's earnings. And I like showing this a little graph, because this graph talks about the most anticipated um, um, earnings releases by market cap and by options volume. So these are usually the players. All right. So today we just had a couple. Tomorrow we have Academy. We have GameStop, and boy, GameStop, man. Implied volatility on GameStop right now is through the roof. IV implied volatility on the options is at 100%, meaning that's the highest it's been in over a year. Very expensive and absolutely crazy trade in GameStop right now. All right. Oracle has tomorrow afternoon after market close, and then Wednesday. This all eyes right now are on Wednesday, because we have the core inflation rate at 8:30 a.m. Eastern. We have the year-over-year inflation number at 8:30. We have the Fed interest rate decision at 2 p.m. Eastern, and the FOMC economic projections shortly following that. And boy, that all eyes are on that. And again, that could cause a little volatility in the market. But again, according to JP Morgan, 1 to 2% move, not really too worried about it. Then Thursday, we have the PPI month over month at in the morning, and then initial jobless claims, which will be, everybody will be watching that as well. Couple of significance. We have earnings. We have Signet, which that one tends to move around a little bit, and Adobe as just some names that you might recognize. So earnings are quieting down, but still you get these companies that are pretty big and significant, and that you're familiar with. Of course, I miss Broadcom, ABGO, Broadcom on Wednesday, and Dave Busters. Dave Busters traditionally is a pretty good earnings play, but this cycle, just kind of where it fell in relation to a weekend and everything, I didn't put it on our list to trade, but that's a good one to watch as well. Is Dave Busters, so both of those have earnings on Wednesday afternoon after market close. So, we trade a lot around earnings. If you are interested in learning about how to trade earnings announcements, I have a free guide that I can give away to you that I'd like for you to read through. And that's available from ewotrader.com/straddle. It talks about trading a very basic couple of strategies around earnings. You're probably already, if you're an option trader, you're already familiar with these strategies. It's nothing new, but earnings are something that helps us trade them better. Okay. And these are strategies to definitely use around certain stocks around earnings. And I go into it in this free guide. So be sure to jump over and download it today. Let's get to our trade of the week. Now, for those of you that do subscribe to our Delta Neutral breakout service, okay, this trade is, we've already done this trade, okay? We did a trade, a straddle on this. For you guys, I wanted to show a strangle and show kind of the difference between the two. So if you are member of the Delta Neutral breakout and you already saw this come out this morning, don't worry about it. This is what I'm looking at. We're looking at Oracle. ORCL is the symbol, and just looking at a strangle on this, okay? And that's just picking a call above the current price of the stock and a put below the current strike of the stock, and then just taking that through the earnings announcement. So we're anticipating a decent move on Oracle. So next week, we will have two trades to look at. We're going to review them both. Restoration Hardware, or RH, we're going to review that because they have earnings on Thursday. Remember, double-digit gain or more, we'll take it off before earnings. And then Oracle will more than likely hold that through earnings, since that is coming up tomorrow afternoon after market close. So listen, if you like what you see here each and every week, please like and subscribe. We'd love to have you on board. But for now, trading, man, we got a full week ahead, lots of action, economic data and earnings all mixed together. So everyone have a good trading week, and we will see you again next week. Take care.